you're going to come into that and you are going to make mistakes. You don't know ARVs, you don't know contractors, you don't know what you don't know, and that's going to be expensive. You're going to lose between 50 and 100 grand as your quote unquote tuition because you tried something when you have no time. So you're going to trust, it's just you're going to trust people you probably shouldn't. You're going to get in situations you probably shouldn't, and you're going to lose money. At the end of 5 years, you will have built up a skill set that maybe makes the next 5 years more beneficial. Alrighty, folks, we are going to continue the Ask the Millionaire series. This is where we get questions from the audience and we riff on a certain topic. And today with Coach Carson, we're going to talk about, hey, I'm a high income producer. You're an engineer, doctor, lawyer, dentist, whatever it is. You're young. Let's say you're in your 30s and you really want to get on this wealth building journey. So there are three options. Should you just buy boring index funds and put your head down and slam as much cash into index funds? Two, should you just be a boring buy and hold, one rental at a time, small and mighty investor, put a big down, cash flow guaranteed, and hold for 20 years? Or should you take this income, try to really spend it up and do some BRRRRs, maybe some Airbnb? What should you do? So I'd love to have this conversation with you, Coach. I see those three options. How do you want to kind of start this discussion?
Yeah, I think that the conversation I had with this person was they were really frustrated by the timing. They wanted to do things faster, and so I equate this like this is the equivalent of somebody running a race, and the wealth building race is like an ultra marathon, and they're like, ultra marathons are so long, I don't want to do that. And understandably, this person's ambitious and they want to push it and they want to get there faster. My recommendation, kind of my general recommendation was you got to look at your strengths. Like so every person has like a personal balance sheet, not only with finances, but like with your skills, your strengths, your weaknesses. And to me, somebody who earns a lot of money, who's a professional, is really busy, who doesn't have let's say they have 5 hours a week, maybe 10 hours a week. They are perfectly suited. Their strength, their competitive advantage is perfectly suited to buy those one rental at a time, kind of big down payment, but buy it in a nicer area where there's some tailwinds, where you're going to tend to have rent growth, where you're going to tend to keep properties full. Like it seems like that is.
I mean, I was this person. Let me be very clear. My book, One Rental at a Time, is this person. I was a high income earning salesperson who at 30 years old realized that the dream of climbing the corporate ladder wasn't for me. I could have done all three of those options. And let me tell you how two of them, well, I'll tell you how all three would, right? So if I would have been in the stock market, I would likely be, no, I would be, without question, I'd be a millionaire today, right? I'm 51. So it's 21 years later. I'd probably be 1.5, 2 million bucks. So, okay, maybe. I could have tried to do more active for flips, build chunk money, stash away. That's sexy. That feels good, but I didn't have time. Time was my job was to secure capital, meant sell software. It wasn't go to network, go to real estate meetups, figure out which products to use. I know it's sexy, but it wasn't, my time equation wasn't there. I had 20 minutes a day, 20 minutes to learn my market, which was far away. It wasn't practical. I mean, you could do all the spreadsheets and you can make all wild ass assumptions and it might look good on paper. Miserable. Now let's talk about what happened in one rental at a time. I watched my market 20 minutes a day. Everybody has that or can create it. I figured out a very small area. I call it a buy box. I didn't do anything outside that buy box for 3 years. Oh, by the way, I started before the crash. I did go to real estate meetups. I went and saw Bruce Norris, who said California crash was coming. I verified the information. I sold all my houses at the peak, went to apartments, right? So just because you buy the boring houses doesn't mean you have to stay there. If you see a crash coming, pivot, 1031, move on, move the equity, don't get stuck. And then the crash happens and I go on a buying spree because of my high income. And, in scenario number one, I'm worth 1.5 to 2 million. In, the one rental at a time, the small and mighty investor, I'm worth 10, 12. And oh, by the way, I have $50,000 a month coming in passive income, which allows me to live an amazing life. So I have the net worth and the income. I don't have this whole 4% withdrawal nonsense. The absolute right answer is boring, solid properties. You watch them, you learn a buy box. It's just, there is no alternative. There's no alternative.
Yeah, I love that you could talk from personal experience, because a lot of my own experience has been starting as an entrepreneur, doing the burst strategy, doing that stuff, and then getting into the boring properties as well, because that's what really set me free. But I think we listen to podcasts, we hear about those, and I love those strategies, by the way. I don't think there's anything
Yeah.
wrong with them, but I think it's going back to understanding who you are, what your skill set is. And for the high earning professional, to me, your biggest advantage is that salary you got.
Yes. Go get it.
Go save that salary, invest that money, be the boring investor. I'm having to tell people that over and over again, Michael. I don't know if it's just there's something tempting and fun about going and being the entrepreneur.
Well, let's play this out. I mean, you tell your amazing stories. You are the entrepreneur, right? They read your stories. They see what you did. They want to get a little taste of that drug, that adrenaline, that fun. Like getting wealthy, boring. It's like watching paint dry. You buy an asset, you get 30-year fixed rate debt, you make sure it cash flows day one, and you wait. And you wait. And oh, by the way, if we get a crazy bubble again, you 1031 out of, houses and go to apartments. And you wait. And you wait. We got to make that sexy, coach. We got to make that sexy. It's just not sexy.
It starts so slowly. You're putting all your money in there.
And the first 5 years are horrible.
Yeah. It's like you're a tortoise. You're the tortoise in the hare. But yeah, I mean, the whole goal of my writing the Small and Mighty Investor book, part of that was to try to make it sexy, to try to reframe this thing a little bit and to say, and I think the one rental at a time mindset has done that too. But if nothing else, part of it is watching this YouTube channel, being part of a community. You can see people 5 years ahead of you, 10 years ahead of you.
Yeah.
And those boring little investments turn into these incredible cash cows, and they pay you and they turn into equity, and you can trade them up. That's the benefit. If you have a job salary, you can just go forget about it. It's almost like it is stock like investing in terms of being like a dollar cost averaging. You put your money in, you buy a good asset, you adjust as needed, but then you just need to forget about it for a little bit. Just like let it ride. And that's when the good things start happening.
Yeah. What I would tell this person is, let me tell you how the next 5 years go. Let's assume you do active, right? You're doing BRRRRs or short-term rentals or whatever. You're going to come into that and you are going to make mistakes. You don't know ARVs, you don't know contractors, you don't know what you don't know, and that's going to be expensive. You're going to lose between 50 and 100 grand as your quote unquote tuition because you tried something when you have no time. So you're going to trust, you're going to trust people you probably shouldn't. You're going to get in situations you probably shouldn't, and you're going to lose money. At the end of 5 years, you will have built up a skill set that maybe makes the next 5 years more beneficial. But I got to tell you, as most high income earners, if we lose 50 to 100 grand, we are not coming back. We're going to say something like real estate sucks, real estate's blah, blah, blah. We're going to go do something else. So if you try to do the active flipping, chunk money, BRRRR stuff like me, I would have been busted out and never gone back.
Yep.
You can do the slow and steady, and it's going to feel bad. I've told plenty of stories about year 12 pulling over on the side of the road because I was not sure if it was working, and lo and behold, we were right there. I get it. It's slow. It's not sexy. So what? Do it anyways. I can tell you that the finish line is worth it. The BRRRR stuff is the rabbit. Most of you would never make it to the end. Tortoise, I make it to the end every time. For me, it was 15 years. For Dion, it was 8 years. For Matt, it was 13 years. It's okay. Buy and hold works. Just slower than most people think.
So do you mind going back to basics, Michael? I mean, we can't repeat this enough. Like what is that what's a good boring property buy box potentially look like for somebody? So they say, okay, I'm just going to put a big down payment. I'm going to do this. Like, let's talk about what that looks like.
Yeah. So again, it's really hard for every different area, but in general speaking, it's a single family home in a B class or A class area, depending on where you are. It's probably 3 or 4 bedrooms. It probably has 2-car garage. It's on a city lot, and you can get 30-year fixed rate debt. It's just how it works.
Does this thing have to meet the 1% rule, Michael?
Oh, I hate the 1% rule. Dude, the 1% rule leads, the 1% rule has hurt more people than it's helped. I hate the 1% rule. I think it's illusionary. I think it's simplistic. I think it leads investors down the wrong path.
In my opinion, I agree. It leads people down the wrong path because you tend to go to properties, if they meet the 1% rule, they don't have the other qualities that you want, which are long-term, good area that's going to attract good tenants, and it's going to grow. It's going to grow in rent. It's going to grow in value. Like those things that are going to allow you to plant the seeds and be a tortoise and actually benefit from being a tortoise don't necessarily always work if you're just chasing the 1% rule. Like there's nothing wrong with the 1% rule per se, but if you, especially if you're a passive investor like this, if you go around chasing the 1% rule, you'll get some kind of C properties and some C markets. But are you going to necessarily beat Michael, who invested in a better market, had to kind of stretch to get that single family house because it wasn't on the 1% rule? He had to put a 30% or 40% down payment today. I mean, no, I think that tortoise is going to win most of the time.
Every time.
You're not compromising. You're not compromising by buying these boring properties.
If your time horizon is a decade, I will beat you every time. If your time horizon is a year, it's a race. You might win. But I've never said getting wealthy is a year. Getting wealthy is a decade. That's the race I'm running. That's the race I want you to run. Let's run the decade race. Let's just go.
Yeah. So if you extend your time horizon, this whole equation, this whole question of strategy, it shifts, it changes. 7 years, 10 years, that's the finish line. And think about how short that is in the big picture. You're 31 years old, you're making $500,000 a year. When you're 41 years old, maybe 38, if you really save intensely, you're done. Like you've got this wealth, and you didn't have to do all the stress and the hassle of having this crazy business. You just leveraged your income and saved a bunch of money. So I
couldn't, let me just echo this. As the 30-year-old who started, I had 20 minutes. We got up to 8 houses in like I guess it was 7 houses in a duplex. And it's awesome. Just larger down payment, cash flow day one, 30-year fixed rate debt. I'll beat you every time. Just stretch out the horizon. And oh, by the way, a lot less stress. A lot less stress. The last thing you want as a high income producer is your side hustle to add stress that makes your day job less productive.
Absolutely. Yeah. I come from a family that had a lot of doctors and dentists in it, and not necessarily that they did bad investments, but it's such a cliche that a lot of medical professionals who make a bunch of money get into these active, like interesting, whether it's a business, whether it's the BRRRR strategy, whether it's a hotel, it's all these very active businesses that most of you don't have any business evaluating. When my suggestion here that we're talking about today, if those high earners, those doctors would have just bought the most boring thing for the 10 to 15 years, they wouldn't have the stress of all that. Like you said, they would have got to focus. They would have been more money in their job, and they would play more stress, golf, more money, travel, whatever you want to do, So anyway, we probably beat this horse to death, but I think this is your example, Michael. I think is really helpful in this case because you went that route. You're here, and you also got into the other stuff later. By the way, if people want, if you want to do the BRRRR strategy and do all this interesting stuff, like you've done a ton of different stuff. Once you had your plateau, once you built that.
Absolutely right. Again, that's all out there for you folks. But when you're early in your career and you're making decent coin, that is your competitive advantage. Don't do anything to distract from that. However, still create disposable income, buy assets, buy boring assets. And if your time horizon's a decade, you're going to win the race. So, Coach, I thought that was a great question. Where can people find you?
If you search for Coach Carson on YouTube, any podcast, I have a new podcast that comes out every Monday. So all your podcast platforms will have it. And if you want to check me out on the web, just go to coachcarson.com, and I would love to hear from you.
Thank you, buddy. Appreciate you.
Thanks, Michael.